Mic check, mic check. 1 2 1 2. How do you do? If this whole trading thing doesn't work out, maybe I'll become a rapper. All right, we got a big audience out there today. What's up, Christian? Mike H, TT. Private afternoon meeting for you three. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I added Google short today. Debated on whether or not to keep it. I shorted AVGO today. It worked. Small. I shorted Open today. It worked pretty well. I shorted Google today. It worked pretty well. Didn't have that much left. So I was like, I don't have that much left. Should I keep it and have a whole additional position, even if it's a smaller one, into this job revision thing tomorrow? Or should I just book the profit and move on? And I don't know. I decided to keep it. Yep, so that is the position disclosure. What's up, Paul? What's up, Tate? Christian's laughing at me. All right, let's jump in and talk about the market today. So we have a green day today. SPYs are up 0.25%. Qs are up 0.5%. The IWM is up 0.2%. What else do I usually look at? TLT. Big up day on this TLT. It's interesting. I could circle back and talk about that. The dollar getting hit back down. All good, Christian. I was joking around. Dollar getting hit back down. Need to look at that real briefly in slightly more detail. Also, Bitcoin's up 0.4%. Chart's kind of in no man's land. Ethereum, which I think represents a little more of the risk on, risk off now of crypto, is down a percentage point. And gold finished green again. Yeah, let's take a quick look at the daily chart of TLT and the dollar real quick before we dive into the usual kind of portion of our meeting. It's a big move now on this TLT. It actually broke to the upside. So, there was so much chatter for a while now, for months really, but especially at the very end of August and the beginning of September, about bonds getting destroyed to the downside, really, especially on the long end, which would mean interest rates really moving up. And no one was talking about the possibility. And I was saying that at the time. I've been saying this for days. That everyone's talking about the breakdown in the TLT that hasn't happened. No one is talking about the fact that this thing could move higher with the expectation of interest rate cuts coming in. And lo and behold, big move to the upside. So you would think that this TLT move is actually taking away one of the risk components to the equity market and is therefore bullish. And the answer to that is yes. That's exactly what's happening here as interest rates are moving down a little bit. With that said, you almost want to pay attention now to the rate of acceleration to the upside at a certain point, because I don't think it's a big deal right now, even though it's a very big move. But you've probably heard me say many times in the past that when it comes to bonds, it's not always a straightforward relationship on interest rates to the equity market, because sometimes it's a fear trade, sometimes it's not a fear trade. What that how and why bonds are moving and what their relationship is to the equity market, it seems like it's constantly changing with the narrative. But the one thing that I've seen as a constant over the course of some of my years of trading is that uh, the more outsized moves in either direction can sometimes begin to have a destabilizing effect on the equity market. I don't think that that's happening with this up move on TLT, at least not yet. Probably because so many people were actually more concerned about the downside move, but we should pay attention to that. And then the other one here is the dollar. A lot of people, myself included, have talked about, one, the overall weakness that we have seen in the dollar, but two is with everyone expecting kind of dollar continuation down, everyone seems to be short it. What if we saw some sort of a short squeeze in the dollar, which would be bearish for equities? Instead, the continued dollar weakness, and I think that the dollar in 2025 is off to its like worst start in 50 years or something like that. Worst half a year, and now we're 9 months in, 8 months in. Um, so really, at this point, when you're looking at the TLT end of the dollar, the movements that we've seen here, they're both actually more bullish for equities. Dollar maybe not too big of a deal because it's still within range, but we're now testing the lower end of the range with this UUP. So weaker dollar, as long as people aren't worried about the dollar becoming worthless, actually is bullish for the equity market. So we'll continue to watch the dollar. We'll continue to watch bonds, but couple notable moves there, along with obviously this move in gold, which that breakout is getting big, and you know that to me seems attributable to everything that we've spent so much time talking about. It's a hedge against uh, the Fed being not as independent as they have been previously amid pressure from the executive branch. It's a hedge against the tariff situation and also benefits from a weaker dollar. So big move, big breakout in gold as well. Turning back to the equity market again, most of them, at least on the surface of things, is at least initially bullish for the market. We had an inside day today with QQQ relative strength. So you can see it here quite simply with my chart of the spies. Very quiet inside day within Friday's range, and it makes sense. We're between big events today on this Monday. We had a big event on Friday with the jobs number, which was an interesting event, right? The 22,000 jobs that got added versus expectations of 75,000 was a really, really big miss, to the point where I almost would have thought that could have been like the catalyst for lower price action in the market. It obviously did not turn out to be that way. But I think that it adds actually increasing importance to the CPI in particular, to some degree the PPI that we're going to be seeing later this week. So I would think that the reason that the market did not get decimated on Friday on a super weak employment number was specifically because people are just like, heck yeah, we are having the Fed cut rates because the economy is doing so bad. But if you're having that really bad employment numbers continue to come out while inflation moves higher, then all of a sudden we could have a big problem. So I think it just adds increasing importance to the CPI. Tomorrow we have this job revisions number. There's been chatter on this job revision number for a while. Like Pat and I were kind of chatting about into the close on the VTF. It seems like there is more chatter about this job revision number than I ever remember seeing before. The reason for that is because it's been more politicized than it's ever been before. So we'll see just to what degree that is market moving. It seems like everyone on the street is expecting the revision to be down. So the employment picture is even worse than what we've been seeing. That's what everyone on the street expects. To what number, to what degree, I genuinely do not know, but there should be at least some degree of a revision lower in the employment number priced into the equity market already at this point. So we'll see. What I need to know is what the rumored like whisper number is basically for the revision, to kind of gauge what we should expect tomorrow. Honestly, it's one of those situations where I think it goes back to what I was saying with Greta and what I said about the employment number on Friday. When it comes to this revision tomorrow, I think we're in a situation where a revision down, which is probably going to happen, but that is around expectations, probably is not bearish for the market at this point. But an extreme revision down compared to expectations would be bearish for the market. And honestly, a revision that isn't down or isn't down nearly as much as the market is expecting could also be bearish for the market. But I don't know, at least not at this point. Maybe I can find some research tonight or tomorrow morning. I don't really know what the market is expecting this revision to be, except I know that they're expecting it to be down. Read a couple of research notes, one originally from Goldman, like at the end of last month, that cited that everyone seems to be expecting this revision is going to be lower. That's what all the sell side research is. I just don't know what the number is. So if anybody happens to have that in front of them and can provide it, that'd be a great piece of information. Otherwise, I'll probably figure it out tonight or tomorrow morning. But I think that's supposed to come out at 10 a.m. tomorrow. So weird, right? Because we're used to seeing mainly these important numbers come out pre-market, but also this happens probably, what is it? It's a quarterly revision, I think, right? So this happens, but it's never been as talked about or as important as it is tomorrow. And that's for a couple of reasons. One is because everyone is seemingly a little bit nervous because the employment situation has already been deteriorating, but two, again, because it's never been so politicized before. So SPY inside day today, Q inside day today, but with relative strength near the top end of Friday's range, and IWM with an inside day as well, but looking bullish and basically with the Russell closing at highs. So there's not really anything new to our big picture here on the market. We'll see if these inside days get resolved with the employment revision tomorrow, and we'll see which way it happens. You look at the spies, you look at the cues, they are clearly bullish, but with a kind of day to take notice of, kind of maybe a day to take notice of on Friday, because Friday was technically with the S&P a breakout failure. So I could see someone making an argument that yes, the overall picture of the S&P is bullish. However, um, Friday's candle is a day to take notice of, so therefore we could kind of break in either direction. So you want to be prepared for this inside five, for this inside day to potentially break in either direction. Um, and the same deal with the Qs, but the Russell just looks full on and utterly bullish. So that's the big picture of the market. There really is no update after today because the big picture of the market just gave us an inside day today. It was a quiet, more range based day. But like I was saying into the close, even though the market was very quiet, look at this 5 minute chart of the S&P, and there's not too much to grab onto. This was once again just a great day in terms of the rotation underneath the surface. We had a lot of good callouts. Robinhood was discussed as a long off that 110 in the pre-market this morning. I wasn't personally involved in that one, but it was a great trade. We are consistently seeing these S&P additions create multi-day upside moves even after their gap up. So I was saying in the meeting today, like it feels a little bit chasey to buy 110 in Robinhood. However, with the way that these names have been trading when they get it added to the S&P, don't surprise to see this trade at 124 this week. And we seem to be well on the way of that. So nice gap and go in Robinhood. If anybody had the tenacity to pay up a little bit in it, you got paid. Just solid move. And the daily chart now looks fantastic with this thing above 115. And again, a lot of times these S&P additions are becoming multi-day moves. The other one that got added, which I didn't like as much as a long, just because I felt like it got bought up a lot into it, was APP. But honestly, even getting bought up into it, I won't be surprised to see a multi-day up move on this. I just didn't have as much of an interest in APP compared to Hood because the expense, the spread, and the fact that they had run it up a little bit into that announcement. But it's another one. Don't be surprised if this one continues. Whatever happened to that short report that came out in this thing back in February or March? Those guys are probably smoked. So it's APP. We had good calls today from open short. So I'm shorting this one pre-market above 7. My target was 6. It was a shallow target. I'm just being a little bit more conservative with new shorts right now because the index level still looks bullish, even if my thought process is bearish. So just kind of competing factors in my head. And what I've learned over the course of my years of trading is is that you want to have the most conviction when everything lines up. So if you have a thought process and the technicals aren't lining up with it, it either means you shouldn't take that trade at all, or if you are, you should be small and managing your risk on it. So, not looking to put on a ton of new short exposure right now, but the open short worked great. I think a few of us were involved in that. There was an AVGO short when it got above 350 that I put on that paid me pretty well. And then the final one for me was Google for the day 4 RDR. Again, I'm super bullish on Google. I've called out probably 20 longs in this thing over the course of the last few weeks that have pretty much all worked. But now, 3 big days up in a row post that news with a day 4 RDR. I like it for the short, just for the pullback. Really just looking for a move to like the low 230s in this, just a little snapback trade. It's another one that worked out great today. So pretty much everything that I was looking at on an intraday basis today worked. Everyone that I took paid me, and that's great. Helped offset the fact that some of my swings were moving against me today. So net, I'm actually small negative on the day because of my swings, but all of my intraday stuff paid me really well. And that's what is on otherwise a really quiet intraday session when you're looking at the indexes. So that's all I got. Really don't have much else. So happy to answer any questions or take a look at what you guys have here. First I'm seeing here is from Varun. Was last Tuesday morning the extent of the seasonal weakness? No, no. SPY Qs Mag 7 exploded Tuesday at 4:01 p.m. and then continued Wednesday. Then Amazon Meta took the baton Thursday, VGO took the baton Friday, and then today all grinded higher. Yeah, so that's just kind of classic rotation. Um, I mean, look, the first thing I would say that you've heard me say many times is seasonality is something that we pay attention to. Seasonality used to be something I threw in the garbage entirely. I used to not be a believer whatsoever in seasonality. My thought process, which is a correct thought process, it's just been updated over time in my brain. My thought process is always, why do I care what happens in a typical September? This is this September, right? Just because something has happened to happen in the past at a certain period of time does not mean that it has to happen in the future. And first of all, that is exactly the correct thought process. But what I learned that made me adjust my thought process over time was that a lot of seasonality is rooted in market dynamics, and those market dynamics take place in cycles. And therefore, that is why, because certain aspects of seasonality has happened in the past, there's actually a higher probability that they happen again in the same seasonal period in the future. That's kind of the short version of it. So as a result, now I pay attention to seasonality, always with a grain of salt, because it's always a new situation. History doesn't necessarily repeat, but it often rhymes. And one thing that I would point out, if in case you weren't here in the morning meeting, I can bring up Pat's note again here real quick. Is where's Pat's note? Um, the seasonality for September does not apply in September's where the Fed does a cut where we are not in a recession. So this chart here from Bloomberg goes back to 1995. There are 4 instances in which there have been a non-recessionary cut in September in the past. Looks like 95. Looks like, what is that? Oh, 7 or 8. 2019. I think it's 2019 and 2024. And every one of those, the market moved higher. And we're expecting that to happen again, right? We're not in a recession right now. Maybe we're working towards one, but we're not in one. And um, we're probably getting a cut. So based on this, you can expect that the typical September weakness actually does not apply for this month. That's one. And two is historically, on a day-to-day basis, which is just even less than on a month-to-month basis, the market tops on September 3rd, but it's primarily choppy in the first 2 weeks, like primarily sideways, really. It really the vast majority of the average percentage of the pullback in the month of September takes place in the last 2 weeks of September, which again makes sense from a market dynamic perspective because it means it's after September OPEX, right? So we'll see if September OPEX acts as a trigger unlocking mechanism for this market to enable it to be able to move down. We've seen that happen many times in the past. The other bullish thing I would point to, though, again, which I mentioned in the morning meeting today, is just discretionary positioning and long short positioning. that actually acts to stabilize the market on the way down right now because they've got a lot of shorts compared to history to cover, and they're not that long, so they got dip opportunities to be able to buy. But no, just in terms of historical seasonality, we are not at the end of the historical seasonal weakness. If anything, I think for the most part, even though we made all-time highs on Thursday and Friday last week, I think that we are kind of still experiencing the typical September chop for the most part. But if the market breaks higher this week because of the job revision number or because of the CPI, if we really start getting back above 650 to 652 in the SPYs, then we just look like we're full on bullish continuation mode still. So I hope that helps, Varun. Thanks for the question and thanks for asking it in plain English. TG here is looking at TTAN as a name that's breaking out. 2 big days in a row for this TTAN. I haven't looked at this name in a long time. Really have not looked at this probably since it first came out. Um, so yeah, worth keeping an eye on. A little too stretched for me after 2 days in a row to buy. I just am a big believer in not chasing price, but if you really like the company, for me, that's always step number one is like I am a believer in fundamentals. I'm a believer in understanding the story behind a company, and when you know that and you have that kind of behind you, it's a great starting point. And then when the technicals can line up for it, it's awesome. Yeah, good little break above that 110. It's a great spot to have some stock from. Otherwise, worth keeping on the radar for the next setup because I don't know. Let's say this is the company of the future and this thing's going to be at $500 the next couple years just to make up a random number that's significantly higher from where it's trading. I promise you it's not going to do it in a vertical line, at least most likely not going to do it in a vertical line, and it'll give us pivot lows and flags and everything else to set up along the way. So I feel like the company should just be one that we keep on the radar for those setups, those continuation setups that will come in over time. So appreciate you bringing that one to the table for us. All right, what else? Not seeing anything else in the VTF, and again, pretty quiet day at the index level, so not necessarily expecting a lot of questions, but I'm always happy to answer them. Let me log into the YouTube on my other screen here to see what's going on. From Dennis, I've also seen stats on significant decreasing probability for a negative September if the market traded up 5% or more in the summer. Okay, I've never seen that one. It's good to know. Liam asking about A-Lab. Uh, Great trade today if you took it. Looks phenomenal. So I don't know if you're asking me about this because you're already in it, or you're asking me about it because you're considering getting in it, or if you just want my thoughts in general. So I'll provide those. Um, we want to be involved in the catalyst that creates the break, not buying after the break already occurs. In other words, you want to anticipate that the move is going to happen as opposed to chasing after the move has already occurred. So this had a really, good looking bullish setup into that $200 area. If you had it on the radar today and bought it through 200, honestly, it would have been a lot of risk. You would have had to risk $6 if you bought through 200 today. Maybe you could have gotten a better price just through Friday's high if it was on your radar. But that's where you want to be looking to buy these things. Through Friday's high is the catalyst that leads to the breakout of this bullish looking pattern on the daily, or through 200 because that looks like a little bit more of a daily chart technical trigger. Again, if you can afford the risk, sometimes you do all the research and all the work to find what the entry point should be. Let's say in this case, $200. But then when the setup is actually triggering, you go, ooh, 200's my spot. I really like it, but $6 of risk in this thing for me isn't worth the risk reward if that's what your stop loss has to be, right? So sometimes you do all the work and then in the moment you're like, the setup isn't right in terms of the small time frame on how I wanted to trade it, so I'm gonna abstain from taking it. And then you can't be upset if it works to 210 or 220 without you, because you made a appropriate conscious decision that the risk reward at that time just wasn't good enough, and therefore the fact that it went without you does not matter. But all the same, I want traders to be thinking in terms of, let me do all the research to find that bull flag, to find that breakout point, to find that buy trigger spot, and get involved in the buy trigger spot because that's the catalyst for the move higher. That's where I want to be doing my research for, as opposed to, wow, $200 is the level. It really went today. Now it's at 220, and I'm going long this thing because it already worked. Sometimes I feel like new traders have in their mind the idea that something working means that it was confirmation that it can work. And I want to actually be involved when there's a little more uncertainty because I'm buying the catalyst for the break as opposed to chasing the break after it occurred, because that little degree of uncertainty of buying at the right time of the break actually leads to a much better risk reward on the trade. It might be accurate to say that you have more confirmation now, but you can't buy this thing at 220 versus 194. It's just a bad risk reward. So I just want traders to get in the habit of that. It doesn't mean that because this thing went that we should take it off the radar, though. Similar to the name that TG just brought up here, which is TTAN. When these names are going and breaking out, when they're giving trend continuation, a lot of times that is a series of breakout, set up, breakout, set up, continue, set up, breakout, and we want to now keep an A-lab on the radar for the next setup, for the next flag pattern, for the next technical pivot low that could be viable. So that's my thoughts on the name. Varun asking me about Meta. I don't like the pullback back through 760 in this, and the fact that it closed on lows. I thought that Meta actually looked great this morning for the long side. The break of 760 was the level that I have been discussing, and then it was building out this beautiful bull flag. I don't like buying bull flags until the ADMA catches up to the base. That never actually happened. The ADMA never caught up to the base before it failed lower. Um, so I personally would have never bought that bull flag. It was too early, too much extension still, and then again it broke lower. I do not like the close on this. This thing tried to break out through 760 today and closed on lows. This now goes in the penalty box. Not my favorite short. You could potentially even be short versus today's high. It's not my favorite short. There's other ones I like better. But certainly not one that I want to be long after today's failure. Hope that helps, Mr. Varun. Checking out the YouTube. Yeah, they're running Octo. I don't necessarily know that it signals anything. We've been having them run these stocks now for a little while. These low floaters. Generally speaking, when you start running many crappy stocks significantly at the same time, it's a late stage signal. And I feel like we've kind of been in that late stage signal for a while with the KSSs and everything else running. When it's just one off, though, it's not necessarily a signal to me for anything. You always, no matter what the market environment is, get the one offs. So that's what this OCTO was today. It was a one off. It was just an insane stock. Yesterday, they were a cardboard company. Today, they're a crypto treasury company. Go figure. It's got a 2.4 million share float. That's why I traded this way. And Steven here in the YouTube is letting us know that an insider filed to sell 208,000 shares for $10 million at $48 a share. That is such a scam, in my opinion. Oh my gosh. What a scam. You just run a crappy company. I mean, maybe they're not a crappy company. I don't know. But you run a basic company that sells cardboard. You announce that you're a crypto treasury company. You make $10 million overnight, and then you file to sell stock. I hope they crush this thing before that guy is able to actually sell it. Genuinely. I don't want, and this is just me with my hi hat on here. This has nothing to do with trading. This isn't going to benefit anyone. This is just me going on a rant. I don't want guys like this to ever make money. I just think it sets such a bad precedent when you're able to just announce some BS for your company have it be involved with a as a low float squeeze. You make $10 million overnight, and then you file to sell your stock. That is such BS. They need to almost investigate stuff like that. But they're gonna investigate stuff like that. They would have to start with the Trump crypto names, like that one that just got went public the other day. So that's not gonna happen. From Robert, yeah, literally push the price up in order for him to dump. Yeah, that's what it looks like to me. ABTC, yeah, how's that thing doing? Yeah, that one squeezed too and then came right back down. Still holding up overall though. Um, all right. Tom Lee bought a ridiculous amount of stock in what? OCTO? He's in that one too? Wow. Good for him. You know, whatever. I can respect some degree. I'm not a huge fan of Tom Lee. Um, I like him more than anybody who is a perma bear, to be honest. I respect a perma bull more than a perma bear. Um, got you. Yeah, I didn't follow this OCTO story at all. Uh, but at some point you just get a little ridiculous on both sides. I mean, I'm one who was funny enough because I've been so short recently, and I've even had a person or two email me recently about always being short. Um, I'm accused of being a plumber bull a bunch of times in the past also, but I'm not. I just change with the market, you know. Tom Lee is the ultimate perma bull. So no disrespect to him, but good for him. I don't mind him getting paid. I don't want the other guy to get paid. Unless Tom Lee had some, I mean, did he have some like insider information that they were going to make this change and that's why he bought it $1? In which case, then I take my respect back. Opto scans your eye retina to collect your info and as a reward issues you a coin. I mean, what are they doing with the information? How much are they paying me? And can I sell the coin immediately? BMNR. Yeah. It seems like I don't know, man. This just could be. I might just be too old at this point. Now that I'm in my 40s, I might just be too old. But from my experience over the course of my career, generally, when you start seeing like 10,000 companies start becoming these like crypto treasury companies, the whole thing's about to implode. Maybe this is a different type of deal where there's legitimacy behind it. I know I've taken a hard look at the paper that MSTR um, issues in order to continue their thing of issuing paper to buy Bitcoin, and that paper is ironclad. There could be a chance that at some point in the future, no one is willing to become a buyer of more of their paper. But this MSTR, everyone always seems to ask about like when's it going to go to zero, or what price Bitcoin need to trade down to in order for MSTR to be a zero. It's not as simple with that as that. Um, if Bitcoin cratered to $30,000, MSTR is not out of business. Not like like a super levered up situation like you might think it would be. It just might be again the fact that they might not, if that were to happen, be able to raise more money. There might not just be any buyers of new bonds that they issue, but they can't. The current owners can't just go like and redeem their bonds necessarily in a bad situation. So they're pretty locked in. So there's and what I'm trying to say is that the way MSTR is structured, it doesn't really get to a point where if Bitcoin sells down, that they are forced to liquidate their Bitcoin on the way down because they're being forced to um you know pay back the bondholders. It's not really set up that way. I haven't done enough research on the other seemingly 25 crypto treasury companies, or I'm sure there's more than that actually, that have appeared that are public companies. Let alone the ones that are probably trying to do this that aren't even public companies. I have not done enough research in terms of are they as ironclad as MSTR is. But I don't know. I just get concerned when you start seeing dozens of these things popping up, all seeming to do this kind of similar, for lack of a better term, scam. And I really say for lack of a better term because I don't necessarily think that MSTR is a scam. Um, but when they're all doing it at the same time, and it all seems to be the value of it is just the value of itself on repeat over and over and over again. At some point, does this game of musical chairs end? I genuinely don't know. I genuinely don't know. It doesn't seem to me to be the same as some of the other situations that we've seen. I'm trying to see what comes to mind. Just look back at anything that Kodak has ever tried to do in the last 15 years, where eventually that fad implodes. I don't know what to make of this. It could continue to stand upon itself for a while, but at the same time, I don't understand how what is to stop every single company in the S&P from becoming a crypto treasury company and therefore its value doing what no CTO, that's an extreme example, goes ahead and does. Why not? I don't know. I don't know. I don't have all the answers. I don't have the answers to that one. I really don't. Uh, the number I saw was that BMNR invested 20 million into Octo from Formula One. Check out Bullish, please. Bullish. You mean Bull? Bull? I don't know. I don't know what bullish is. I don't have a symbol for that. It's too many letters. Maybe you can give me some more information. I don't think you're asking about bull. Oh, BLSH. Thank you. You guys are so much smarter than me. I can't keep track of all the symbols. Yeah, we took this the other day, and I don't think that anything has changed about it. This led to me going on to the rant about how the cycle of IPOs works, about how you start with the core weaves. I've just seen this before. You start with the core weaves, you start with the circles, where it's like very early in the IPO cycle. They price them a little bit more appropriately. They bring them to market on the secondary market, where we can all trade them a little bit more appropriately. So you get really big follow throughs and really big pops. Then the greed comes in. They start to have, and I've never done any research on BLSH specifically, but they start to do worse companies at higher numbers, and then they don't trade as well. That's just kind of how the cycle works. Like those first ones work really well. That enables everyone. Then that enables them to open up this BLSH at wherever they opened it on its first day, clearly too high of a price, or even Fig, which I think Fig, as a name I have done some research on. This is a very real company, but the IPO I think was 32 and they opened it at 85. Just absurd at that point. That's how the cycle works, right? And then at the same time, Fig at least is a real company. Again, I've never done any research on this BLSH, so I can't give you any feedback on it, whether it's a good company, not a good company. But generally speaking, the companies get worse as you move through the IPO cycle, and they're opening them too high, like they did with Fig. So I don't know. You don't want to be buying these things on the way down, right? Every single person that has ever bought BLSH on the secondary market is out of the money on it. So that means that there's a lot of supply, but not necessarily a lot of demand until it gets to a price where some people maybe think it's worth something. Like, again, haven't done research on DLSH, but Fang is a similar example. And honestly, it was somewhat pattern. Immediately after Fig is where BLSH is, right? The sell down, trying to create a base, but then Fig broke down on that base, tried to create another base. And remember, everyone was talking about Fig long off of this like $69 base. And I was saying, I think that this thing could break down. And that was partially based on everything I'm talking about, just understanding how the IPO cycle works, and also just my research on the company. I'm interested in owning Fig, not at $85, not at $70. I would take a look at this thing starting at 50. just more for my fundamental research. And then obviously would want a good technical chart set up to confirm that. So right now, this DLSA, having done zero research on the actual company, so just repeating that again, this looks more like a short to me than a long still. Everybody's got the money on it. Let's see what happens with this base. I'll say the same thing with this BLSA because I said with Fig at 69. What I said with Fig at 69 is if you want to buy it on the way up. Let the base hold the support, let it break up, and then I remember saying you could buy this thing like above 72 if it's going. And I also said the exact same day it's a short beneath 69. And the short ended up working. I didn't take it because it was too close to its earnings report. Obviously, then they sold it down even further on the earnings report. But this DLSA, I can say the same thing. Maybe it's starting to build out a similar base here at like 48 or whatever as Fig built out at 69. But let it build the base out. Then you'll know your support and your resistance of that base. And then is it a base that's breaking higher or is it a bear flag that's breaking lower? One person's base is another person's bear flag in a lot of circumstances. And you can just participate in the way in which it's breaking. If you've done your research, you like the company, you think it's good here at 50, it breaks up, you buy it. It goes sideways here, uh, basically meaning it's forming a bear flag and breaks lower. You either don't do anything with it or you short it if the cost is appropriate. So that would be my opinion on BLSH. And then in the VTF here, and thanks Liam and TG. TG saying that maybe there's a double bottom on the hourly. Yeah, maybe. Maybe. Worth watching. Same deal though. That'll lead to a breakup on the daily chart or not. Um from Eli, is Circle and CoreWeave finished with their 90-day lockups? CoreWeave, I'm pretty sure, is outside of the lockup now. Circle, I do not know. I haven't seen anything on it recently. Eyeballing it 1, 2, 3 months. It's probably close. This thing's just been in a down grind here. I remember being so out of the money on a short in this thing at this move higher, stopping myself out for a big loss, and then re-shorting it higher and capturing it. That was such a wild one. But same deal. It was just earlier in the IPO cycle. I don't know what it priced at, but they opened it at 66 and ran it to 300. Look at the hood and coin IPO. I remember they sold. I remember having it on the IPO day. I remember shorting that. But yeah, I mean, they sold that thing down, and then eventually the lockup hit came out, and yeah, they really wound that down before it. And this became a real company. Um, Hood, I don't remember. Oh yeah, Hood was one of those squeezers, but then also had a big reckoning. Wow. It's interesting sometimes when you look out over the course of the full history of a company like this Robinhood and look at the chart. Really interesting. Look at this, 117 now. The company has improved. Do we think that the company has improved that much compared to when it was a $6, $7 stock? I don't know. I don't know. I'll leave that one to you guys. From Varun, quick question: is TLT pricing in 25 and 25 cut sequentially, or just 150? My understanding is that the bond market is currently pricing in, I think, 3 25 basis point cuts for the year, with a 10% chance of a 50 basis point cut in September. Yeah, those bases can take years. Oh, that's the point that Tate was making when you look at like the Robinhood base before it actually broke higher and went. And most likely, without me diving in and really analyzing it, most likely it tried to base several times and broke those bases down before one actually broke up, right? I mean, very clearly you can see one here like $40 after the IPO that it tried to support, failed. Looks like it tried to do it again at 34, tried to support it, failed over and over and over again until eventually that changed and it broke up. But Carvana was another one. I remember buying this breakout. I remember clutching this like breakout in Carvana somewhere down here. I think at $18, crushed it. I crushed it all the way up to, from like an 18 buy to like a move to 40. Whoops. Should have done more of the trailing part of trim and trail, huh? Yeah, or SoFi. I wonder if Wedbush still has their $5 price target on SoFi. I bought the hell out of that downgrade. I'll never forget. I can't remember which day it was. I think it was back here in May of 2023. Um, big move lower when Wedbush came out, and it was just it was like the worst analyst call, one of the worst analyst calls I've ever seen. I bought the hell out of that stock. Whoops. It's funny on the rare occasion. So, at Tate saying, I assume joking, I think he got fired at LMAO. It's really interesting. It goes back to this, that's actually a problem. If he got fired, I actually think that's a problem. I don't know what his reasoning was for making the $5 price target, and obviously it was very wrong, and we all thought it was very wrong at the time. Um, but analysts, generally speaking, are afraid to put sell ratings on stocks because what tends to happen in that business is that if you have a buy rating on a stock and you're wrong, they forgive you. If you have a sell rating on a stock and you're wrong, you lose your job. And what that ends up leading to is exactly what we see with sell side analysts and why they suck. We look at the upgrades and downgrades every single morning, not because I give a damn about what the upgrade and downgrade actually is or what the price target is or anything like that. We look at the upgrades and downgrades every morning just because it is a catalyst event, right? It's an event that puts the stock in play. Um, that's why we look at it, not because we give a damn about what that analyst did as far as the upgrade or the downgrade or the price target. Because 95% of what sell side analysts do is just chase price. Stock goes up, they upgrade it. Stock goes up, they increase price. Stock goes up, they upgrade it. That's why we see it all the time. We make fun of it. Huge move in a stock, and then the upgrades happen, right? Like not like which is useless. Like show me the analyst who put that strong target on ahead of time and really took a stand on a stock before the move. So I actually would think, even though I thought that Wedbush analyst that put the $5 target on SoFi was a complete and utter joke, just making a huge mistake. That's what I thought at the time. I actually hate to hear that he got fired for it because you just so rarely see an analyst have the tenacity uh, to put a sell rating on a stock. You don't even see it generally speaking. If you do, you see it chasing because again, that's what they do. They chase, but you don't see the analyst take a stand. And even if I completely disagreed with him, um, he was getting harassed on Twitter. Yeah, I mean, the the internet's so ruthless. But being harassed on Twitter by anonymous people. Yeah, for sure. And I was long the stock and bought the downgrade because I thought of how absurd it was. But I don't like seeing that because these analysts they just never take a stand on anything. So maybe he genuinely thought that for some reason and he was wrong and he can learn from his experience without being fired. Whatever, rant over. Uh, Klarna's gonna IPO on the 10th. All right, good to know. Another company that I know nothing about. I've just heard the name. NBIS moving on a big agreement with Microsoft for AI infrastructure. Wow. It was massively, massively long this NBIS at like 25. I do not have a position anymore. StubHub is this week. I hate StubHub. I hate it. I have vowed I will never buy from StubHub. I'll buy from other resellers, even though all of them are bad. I will never, ever, ever spend a penny at StubHub. Did you straight that fast? You already had that one lined up. Yeah, they played me. My take on Duolingo is it's not a good stock to trade. The spread's too wide. Stock's been getting beaten up, so it looks like it could use a bounce. It looks like it could use a bounce. You could be long versus yesterday's low on it, but the spread, I typed that up, I think, at one point midday today, and it was trading at like a 45-cent spread with like no liquidity. And this is a $270 stock. I can only imagine how bad it was at 500. And that was also at like 11 a.m., not not even at the open where things are even more spready. So I just don't think Duolingo is a good trading vehicle. But purely based on the daily chart here, long versus Friday's low for a bounce back, a little bounce back, fine. Yeah, there's some support around here. It's extended into support. You have a hammer candlestick without good volume on Friday. You could be short here for a bounce. I mean, long here for a bounce back to the 280s. Um, Not one that I'll be involved in. And then, yeah, honestly, then it becomes a short once it's not extended, as far as I'm concerned. CHYM. Oh, yeah, here's another one. Another one that was not an early cycle IPO. Sold it down. Duolingo has new products coming out. Okay. I like Duolingo. I've used Duolingo a lot. I'm a fan. So I'm rooting for them, but I have no stake on either side. Back over to the um back over to the YouTube channel. Guy trader really wants me to look at QS. Yeah, Sharir on the team was shorting this thing today, and I think made a few bucks on this opening short versus off of 10. I wanted higher because I was a little too nervous to do that. Gap up on some news on a day one for a stock that's been a meme in the past. I wasn't taking that short with him, but I think he made money, so good for him. Too That's too tough of a trade for me. I was saying, I don't think I said it out loud, but in my head I was saying if it were to get to 12 today, I would short it. Or if it closed on highs for 3 days in a row and found itself like between 12 and 13, I would short it. For me in this area, there's no trade. I don't think it's a good company. I think it belongs lower, so I don't want to buy it. But it's not going to be a meme stock. So like I said, I'm not shorting it here. I want higher. I want it to squeeze higher in order to short it. So that is my thought process. From Steven, are the CTA triggers still at 6,300 ish? I have not seen an update on it, Steven. I have not seen an update on it. We did not see an update from Bank of America on it this morning. Usually Goldman comes out with it like Monday night, Tuesday morning. So maybe I'll have an update from Goldman tomorrow with the CTA trigger. But that should be continuing to work its way up. So if the last we saw it was like 6,300, it should be higher than that now. I don't know where, but it should be higher than that. Do I like SMCI to reshort in the 4-day consolidation? So I've been short still from that 44 pre-market or whatever that was. I'm still in it. My target's been 39 this entire time. It hasn't quite gotten there, and I've been pretty greedy on really wanting to actually get my target. But yeah, this looks like a bearish consolidation for a potential add. The ADMA hasn't fully caught up to those highs, but it might be there tomorrow. So this SMCI looks like a for continuation versus that 4118. So I like it. I still have some. So maybe I'll add. I'm so short right now. And again, the spies and Qs and IWM are not really confirming it. I'm short names that are not trading well, so I'm making money in almost everything that I'm short, which I'm pretty happy about. It's a combination of them not trading well and me trading them well, which is a great combination. Uh, but I'm like I don't want to buy anything, but I'm very nervous to do anything new on the short side, at least with size. Though I did end up swinging that Google short tonight, small. But yeah, I like the idea, Eli. Yeah, NBIS just had some news come out, crushing the game. All right. I'm gonna wrap it up there just after 5 o'clock. Have a great night, everybody. See you all tomorrow.